G'day everyone, and welcome back to this Hidden Gems webinar, a tech-themed webinar today. So if you've got questions, don't forget to type them in the little green box provided. Now, all the recordings, individual recordings today will be available on our YouTube channel and on ShareCafe next week. So nothing else from me today. First up, we have a keynote presentation from Thomas Rice from Perpetual. Now, Thomas, if you don't know of him, I worked with him in Firm Capital some time back. He's very well known in the tech industry in Australia, both as an angel investor and as the portfolio manager for the Perpetual Global Innovation Fund. One of the first investors in that fund, by the way, was Atlassian founder Mike Cannon-Brookes, as well as the founding partners of venture capital firm Blackbird, and Matt Williams, who's the PM of Airlie. Now, this is a fund comprising of a hand-picked portfolio of companies that are benefiting from technological change and innovation. You can find Thomas's innovation wrap regularly on ShareCafe. I'll let Thomas talk about the performance of his fund and his investment strategy. Thomas, good to see you. Over to you, mate.
Good to see you. Thanks for having me. So I'm Thomas Rice. I am the portfolio manager of the Global Innovation Share Fund at Perpetual, which I'll provide an overview of today. Please note, this is general information only and isn't intended to be financial advice. If we advance to slide 3. So let's start with what the fund is and what I mean by innovation. So the core idea behind the fund is really that to outperform, you need to find misunderstood and mispriced stocks. And the best way to find misunderstood and mispriced stocks is to focus on areas where the world is changing. So the inverse of that idea is that areas of the market with little change tend to be well understood and fairly priced. So the fund's really a fundamental, bottom-up, global stock-picking fund, first and foremost. But we choose to spend our time just trying to understand that change in innovation that's going on. It's also a global strategy. So right now we're underweight North America because we're finding better opportunities in Europe and Asia. It's also a lot broader than technology. So recently we've seen our weighting in information technology and communication services decrease, but that's just because we found more opportunities in industrials and healthcare. And that positioning is really driven by stock-specific opportunities. If I talk about the team, so I run the fund. I have 18 years in markets, first at PM Capital for 11.5 years, part of that with Tim, and then 7 years at Perpetual since 2014. I'm supported by 2 highly experienced analysts, Andrew Plummer, who joined Perpetual from 5 Oceans, and Mark Skurnick, who joined Perpetual from Fidelity in Hong Kong. So if I talk about performance, the fund was started in June 2017. I'm happy to say that we've delivered strong returns to our investors to date. So it's 35% over the last year to August, 25% since inception, which has outperformed the MSCI All Country World Index by 11.6% per annum. We've been around for 4 full financial years. So the next slide goes through how that looks on a per financial year basis. The last 2 years have been particularly strong, with a 37% return in 2020, 38% in 2021. And that return's been driven by a wide variety of stocks, which we kind of show in this next slide. So what this chart shows is the top 10 contributors to performance in each financial year in the light blue. The dark blue is then the performance contribution from the 11th biggest contributor onwards. So you can see in 2020, when the fund returned 37%, the biggest contributors were Zoom, Virgin Galactic, and Axon Enterprise. Zoom was the biggest contributor because we made that the biggest position in the fund in March 2020. We saw COVID, leave China, it was beginning to spread through Europe. We were worried about the risk that would get a lot worse in the world. We were looking for ways to hedge the portfolio. Zoom, which we already owned, we made that the biggest position because we thought that would be a good COVID hedge, which turned out to be true. But you can see even in that year, that was less than a third of the contribution, and there was a long tail of other stocks. In the 2021 financial year, when the fund returned 38%, the biggest contributors were Twist Bioscience, a synthetic biology company, Boohoo Group, a UK online retailer, and Vestas Wind Systems, the largest wind turbine manufacturer in the world. But you can see from that dark blue bar that 40% of the return came from stocks beyond the top 10 contributors. And one thing I try to do is really keep a portfolio that's fairly diversified. I mean, I think a portfolio is a lot more robust when you have a lot of different diverse ideas driving performance, rather than just having 1 or 2 big thematic, bets that the fund is making. So to give you an idea of what I look for in a stock, I want to talk about Axon Enterprise. That was made the top 10 contributor list 3 of the last 4 years. It's the biggest contributor to date. So what is this company? You might know it from its first product they came out with, which is a taser. I first came across it in April 2017 when I saw this article in the top right. So Taser International now Axon to offer free body cameras to every US police officer. That was also when they changed the name from Taser to Axon Enterprise. As you can probably guess, Axon is all about police body cameras. If you ever see a police officer wearing a body camera like the one in the bottom left, I mean, that's Axon. Next time you see body camera footage, you'll probably notice the kind of Axon labeling on it that you see in the bottom right there. So why was it interesting as a company? There's a few reasons. So number one, Taser itself is a really strong business. It's a very nice industrial business that grows high single digits. It's got a lock as a less lethal force option for police. And the second reason is all about AI. So it previously done a lot of work understanding what machine learning was, what AI was, what you could do with it. One of the key takeaways from that was that, one way to think about AI is it lets you solve problems you couldn't previously solve with computers. So image recognition, voice recognition is a big part of that. It's why Facebook years ago started automatically detecting faces in photos. It's why assistants like Siri emerged. So for me, we were kind of looking for interesting data sets that that could drive AI. And we thought, so when I saw a company with that was a leader in police body cameras, I thought that's an interesting data set. Maybe you can add additional AI services around that. And as I did more work on that, actually, if you go back a couple of slides, as I did more work on that, I realized that Axon was onto this opportunity already. They were miles ahead of the competition. They had already set up an internal AI division. They launched a cloud platform to store the body camera footage. Whereas the competitors weren't looking at it at all. The major competitors sold body armor, holsters, and body cameras. So it was an extra SKU. These guys were focused on it. So what were they doing? So the first thing they added was automatic reduction. When you release body camera footage, you need to blur faces and the like on laptop screens. That was a very manual process where you draw a box over an image and then move it, move a few frames and manually move it. With AI, they could make that automated. So they did that. They followed that up more recently with priority ranked audits, which is the next slide. If you think about running a police force, every day you have thousands of hours of footage being uploaded. No one can review all of that. So using AI that now automatically flag that, it adds transparency to policing. The long-term vision of the company is all about automating more of police work. If you think about 2/3 of a police officer's time is paperwork. That's on the next slide. It's so they're aiming to automate more of that. So they launched a business called Records Management, which really takes the idea of using that body camera footage as the heart of a police record. That's now being sold. They're adding automatic transcription to that. And if you go to the next slide, you can see that if you bought the stock when they changed the name in April 2017, you would have done very well. We bought the stock when the fund started in June 2017. So that's why it's been a big contributor to the fund. And it's really, Axon's really a great example of a company with a management team that understood the technology landscape, how that was changing, and really adapted their business to take full advantage of that. Okay, so that's been a big contributor in the past. I want to talk about what I'm finding interesting today. One of the most interesting companies I'm following right now is Opendoor, which I think has the potential to be a truly disruptive company in the real estate industry. So what are they? They're essentially the leading iBuyer in the market. So let's say you're a homeowner in the US and you're looking to sell your home. Often that's a very cumbersome process. It can take a few months to find and appoint an agent, make small repairs, clean up the house, have open homes, have lots of strangers through your house. At the end of it, you don't know if it's going to take a few months or a lot longer. You're not sure what you're going to get. You'll typically pay a US broker a 6% commission for that. It's a painful process for a lot of people. It's a process that hasn't changed in a long time. The idea of iBuying, and Opendoor is the largest iBuying company, is that instead of doing that, you go to a website, you put in your address, you answer a few questions, and then via a smart algorithm, they'll make you a cash offer within 24 hours. And if that's accepted, Opendoor will charge a 5% service fee, which is comparable to what brokers charge. And you can choose when the sale closes. It's a much better experience to sellers, and it's a part of the market that's growing really rapidly. So that's the way to think about Opendoor. It's really a core service about making a better experience to the sellers and then charging for that. So on the next slide, if you think about the key questions for a company like this, it's really can you price houses appropriately and manage that risk? It's important to note that algorithms for pricing property are not new. I mean, when I used to run an Aussie long short fund a long time ago, we used to own RP data in Australia, which values every property in the country on a daily basis. They do that for property indexes and automatic loan approvals below certain LVR. Those algorithms were good enough for that purpose, not good enough to be buying properties. what's changed is the rise of deep learning, where a company like Opendoor can now look at significantly more data points and come up with an accurate estimation of a value of a house. So it's not just things like lot size, number of bedrooms, but it's granular data like the type of benches they have, the type of roofing. There's a couple of this with local experts in the process, particularly early on, which really helps capture the nuances of a local market. And what they found is that over time, as they make more offers, as they collect more data, the algorithms get better, and that really drives profitability at a local market level. So the next slide. So this is a company we've watched for a while, only bought that back in May. We've since made it the largest position in the fund. I think it will be a meaningful disruptor in the real estate market going forward. And yeah, so very excited about the future of that company. The other one I want to briefly touch on is GXO. So it's the second largest contract logistics company in the world. Three major trends are making that interesting. Number one is the rise of e-commerce, a very long-running, ongoing trend. E-commerce penetration in the US was 6% a decade ago, now it's 21%. That e-commerce growth is leading to greater logistics intensity. So if you think about shipping out packages to a store versus individuals, that's about a 2 to 3 times increase in logistics intensity. And then the third one on the next slide is really increased complexity within warehouses. So we're seeing increased use of robotics, goods to person systems. So there's robots that take the packages to the pickers and packers, advanced sortation systems, et cetera. And that's all leading to greater outsourcing because it's harder for a company that's focused on their consumer brand and their goods to manage all that complexity. So we believe as it becomes more complex, it drives outsourcing, and some of those efficiency gains will accrue to the outsourced partner, GXO in this case, which will drive strong returns over time. So on the next slide, you can see that only recently listed. It was owned by a company called XPO that spun them out. We did own XPO prior to the spin out, but now we own that directly. I think that has a long, bright future ahead of it. If you look at the top 10 in the portfolio, I won't go through all of these. I just want to point out that it is a fairly diverse mix of companies. Opendoor and GXO, you can see as number 1 and 3. It's also not only newer companies. We own Siemens as our 4th biggest position, which is an industrial conglomerate in Germany. What we like about that is it's got a very high quality, and highly valuable software business at the core of it. Okay, so hopefully that's given a good overview of the fund. To go to the next slide, to wrap up, I just view it as a fundamental bottom-up global stock picking fund. We're focused on understanding change and innovation in the world, and it has delivered strong risk-adjusted returns over time. Thanks.
Thomas, thanks for your time. I know that's a bit of a rush, 10 minutes, but and I also know how passionate you are about this space and have been for a long time now. How do you filter your ideas? It is such a broad scope in terms of what you look at.
Yes.
How do you filter all that noise?
Yeah, that's what I love about global investing. There's like $10,000 billion companies. There's so much you can look at. So really, we have a process on my team where we go through ideas very quickly. So we can get through an idea very quickly to work out if there's a lot of potential upside. We do pay attention to particular areas of innovation. So when something comes along like machine learning, we'll spend a lot of time on that. The space industry's had a lot of change lately. Only a few companies on the listed side there, but we'll look at that to try to understand what's going on. Drug development, mRNA vaccines, we spend a lot of time on. So we have these kind of top-down areas we will look at. But then what drives the portfolio is really this kind of bottom-up fundamental process, like what's the value of the company, is it cheap, etc.
There's a question here: how different is your process from Kathy Wood at ARC?
So, there are a few differences. I'd say, we are a lot more global in nature. Their holdings tend to be a lot more US-centric. I'd argue we're a lot more valuation-centric as well. So we're not really playing big themes for the sake of it. It's more around, can we find cheap stocks? But here are the areas we're paying attention to because we think there's a greater chance we'll find cheap stocks in those areas.
And where does China fit in the equation, given there's kind of been a bit of crackdown on some of the tech platforms, as an example?
Yes, so China is interesting. I think China has been an important market. We have had up to about 10% of the fund in China in the past. We've recently reduced it. I think some of the regulatory crackdowns recently have gone further than I expected. So, there is a risk on the horizon there that I think needs to be properly assessed. We do have a big position in a company called Joy. I think that's quite interesting. In the previous slide, I mentioned that as China/Singapore because their core business, YY Live, is a live streaming business in China, but they have agreed to sell that to Baidu. Once that deal closes, they'll be trading below cash value, and the residual asset you have is actually a global live streaming based in Singapore. So I think that's actually really interesting because it's come down with a lot of the other Chinese stocks, but I don't think you'll have that same risk.
And what are the kind of key themes you're looking at in terms of moving forward? Is it AI? Is it data? What are you looking at?
Yeah, I mean, there's quite a few. So AI is definitely one of them. I mean, I'd view OpenDoor as an AI company. We've looked at NVIDIA in the past, etc. Renewables tends to be a big space we're interested in. I think there's an ongoing trend to that. E-commerce. I mean, there's quite a lot. Some more emerging spaces are things like VR and AR. I mean, I'm quite optimistic around the future of that, even though it's been a bit slower to take off. So there are quite a few themes like that we're excited about.
And is there any plan to have a listed product? There's questions here. How does an investor get access to your fund?
So at the moment, it's just through the directly to Perpetual. We are on a number of wrap platforms as well. But that is something we'll probably look at.
And a clever question: what sort of technology do you use in terms of your stock picking process?
So we do a lot of the so on the technology side, I guess one thing we've added in the last few years is a lot more kind of data scraping and data analysis, because there's a lot. I mean, I talk about digital footprints, this idea that a lot of companies have a lot of public information out there that people aren't utilizing. When I made Zoom a really big position, one thing we did the proper analysis, we did our modeling and so forth, but I want to get a sense for the large customers that they were picking up. As it turns out, large customers tend to have their own subdomain. So Nike will have nike.zoom.us. So we actually went through the process of guessing the subdomains of the S&P 500 companies, looking up if they existed, and then that gave us better confidence that they were in fact signing up a lot of these enterprise customers. So I mean, that's one part of it. We track a lot of job ads for a lot of companies as well. Job ads can be a good indicator of what a company is going to do in the future before they've announced it. So we actually do a fair bit on that side of things.
Very smart. You're always ahead of the curve, Thomas. Thanks for your time, mate. That's all we have time for. I appreciate your time. I'd love to get you back on, and we'll go from there.
Great. Thanks a lot.
See you later.
All right. Bye.
Next up, we have LBT Innovations, ASX code LBT, of course, market cap of $34 million, 1 year return of minus 14%. The company is a groundbreaking designer of advanced technology solutions for the medical industry. We welcome back Brent Barnes, who is both the CEO and Managing Director. Brent, over to you.
Great. Thank you, Tim. So as Tim mentioned, LBT Innovations is kind of focused in the space of clinical microbiology, and it's a large growing market. And we've developed an AI-based machine vision capability to provide some really disruptive automation to this market segment. The next slide talks through the typical disclaimers that we need to provide as a listed company. But look, let me talk through what's clinical microbiology and what does this kind of $4 billion market opportunity kind of mean. People are be aware of virology at the moment with COVID, and so that's a department within a lot of these busy labs all around the world. Well, clinical microbiology is another function or another discipline that sits within these labs. And it's a discipline that's growing about 6.5% per annum. And it's an area that has not had a lot of disruption. The UTI, or urinary tract infection, is probably a well-known infectious disease state that people might be familiar with. So that's an example, if you like, of when a urine specimen goes to a lab and it goes into the clinical microbiology department to kind of make that a little bit real to people. Next slide kind of talks through some of the challenges facing these labs globally. And so you'll see a picture of a Petri dish on the screen. The Petri dish was developed in the late 1800s, and still today, in every lab all around the world, a Petri dish is looked at manually and interpreted manually by a scientist, a microbiologist. So there is no automation other than the scientist reading the plate. And it's really ripe for automation. What we also see is a situation where we don't have enough microbiologists coming through the university system. And so there's a data point there. I think it's about 7% actually of jobs in the US at any one time are vacant. So microbiologists are in short supply. We have a growing market opportunity in terms of the number of Petri dishes going through this workflow. About 2 billion of these plates go through labs all around the world every single year. So next slide kind of outlines the technology that we've identified to disrupt what is a completely manual process that occurs, like I said, in all labs all around the world. And We call it the APAS Independence, the Automated Plate Assessment System. And there is no other technology that automates culture plate reading. We are the first and the only technology that does this. And it's a platform that we've been developing for a long period of time. So obviously being in the healthcare space and needing to demonstrate the accuracy and the performance is really, really important. And we've gone through all of that over a long period of time. Very much a de-risked value proposition to potential investors and shareholders when you look at what we've achieved so far. So we've had to do that by demonstrating the technology works through 10,000 patient global clinical trials, multi-center trials. And the key reason why we needed to do this is because we needed to demonstrate that we could train an algorithm, have an algorithm interpret a plate at least as accurately as that of a scientist. And so we've been successful in demonstrating that capability. And we pioneered the de novo application for the US FDA and still remain the only product that has US FDA clearance. We have a portfolio of patents that cover the core technology. This is a technology that is very, very difficult to replicate and to copy. And so a lot of the IP is not only just in the technology development in its own right, but also the processes that we've been able to establish internally and to get it through the regulators. Once again, we lead the way in this regard. And so the instrument is the final product that we sell and that we sell to labs. And the instrument kind of reviews these Petri dishes about 3 times faster than a scientist. Next slide, please. And we've made some really good headwinds in terms of our commercialization efforts. So, we've sold instruments. We've sold 6 instruments globally to date as part of an early commercialization effort. We've appointed channel partners, really established ones. Beckman Coulter, I'll talk about them a little bit later on. But we've done all of that heavy lifting in terms of the market access. We've got through the regulatory barriers, so we can actively sell in Europe, in the US, and in Australia. And we've appointed key opinion leaders to really be advocates for our technology in each of those markets. And so all of that I guess groundwork has been established. Next slide talks around some of the technology adoption and the process that we've gone through. And look, I think with all technology, not everyone wants to be the first one to trial it. And so the importance of having key innovators, and there's some pictures of our key opinion leaders in the US and in Germany are pictured on the screen there. And what we're doing now is moving through that development curve of people. And so moving into that early adopter, and then we'll get into that kind of that majority in the time to come. Next slide. But we've been really proud with some recent highlights, especially during a time of COVID where travel has been impossible, quite frankly. Over the last year and a half, we haven't been able to travel globally at all. And when you think about global markets, well, the big global markets that we operate in are outside of Australia. And so we've launched in the US, in Germany, in France, and the UK. And recently, we've sold 2 instruments to the Health Services Laboratory in London. So this is a state-of-the-art facility. It's a sonic lab. And they purchased the 2 instruments for their high screening urine and MRSA processing. What's really what we're very proud with that particular sale is that we did it all completely remotely. So we appointed a global service organization. We did all of that training remotely. We shipped the instrument to London and they installed it for us within a day. It's very much plug and play. And we did the training on the technology with the customer all remotely. So what it's done, it's really set a blueprint from a service delivery capability perspective in a way that's a really positive thing in light of COVID. Next slide. And looking at that market opportunity, the way that we segment our customers is based on the number of patient plates that they get. So not all labs are the same. You're going to have small, medium, and larger style of labs. And really our target segments in that kind of medium to large lab. And we've identified that global market opportunity is 13,000 labs. But if we break that down, just looking at the market opportunity for those countries that were actively in country commercializing at the moment, it's a bit over 2,000 labs. And so the kind of diagram on the right there just gives a bit of an idea of what the dollar market opportunity looks like once we get to that kind of 20 to 30% market penetration. So it is a big and meaningful sales opportunity for us. Next slide. And we're not done there. So you kind of think, well, we've got the physical instrument, we've got a number of these analysis modules, which is the software. This is the unique AI interpretive software. We've developed those for urine and MRSA, and we're rolling those out. But we can put more apps, we can develop more automation and put it on the instrument that's already at play. And one really, really exciting opportunity that we've got with us at the moment is antimicrobial resistance. And this is the picture on the top right hand of the screen. This is a disc diffusion method, and what this is looking to do is measure the zone of inhibition, which is looking at essentially the bacteria and how it is resistant to the antibiotic. And so those little circles or those little discs are the antibiotics, and the zone of inhibition around that is the resistance to that antibiotic. That's a really important part of the workflow, because it forms the basis of a drug recommendation to treat the specific infection for the patient. So kind of like that personalized medicine application there. And so we have a grant, and we're through development. We'll have an early version of this at a customer at the end of this year. So a really exciting opportunity that only extends the application for APAS with our customer base. The other really exciting thing is looking at early reading. And so when these specimens are put onto a petri dish, they're incubated, and they're incubated for 18 and up to 30 hours. Well, now that we're digitally imaging these culture plates, which hasn't been done before, right? So, we're pioneers in this area. And because we've got an algorithm that can identify bacteria and colony growth, we're looking at ways to bring that incubation time in. So rather than the 30 hours or the 18 hours, let's do it in half that time. So not only are we automating something that is very, very manual, we're able to then reduce the turnaround time and get that patient result back quicker. And so that's a really exciting new technology development that's on our roadmap. Next slide. And look, we capitalized the company last year and raised $8.4 million. With just under $10 million in the bank at the end of June. So we've got reasonable runway moving into this next period of time. Next slide. So kind of wrapping it all up, I kind of said here, there's no better time to be in the diagnostic space. And, I think one of the things out of COVID is it's identified the need for automation in these busy labs. Every lab all around the world right now is just blown off their feet in terms of COVID testing. Automation will solve that issue. And this is what our technology does. APAS independence has been de-risked. We've got the regulatory clearances. We've established key opinion leaders. And I think what most investors who have followed the story are really looking forward to is that stitching up a US distributor that we've said to the market will happen by the end of this quarter. And I'm well aware that's about 3 weeks away. So, and we remain on track to do that. So a really exciting opportunity to identify a channel partner in our single largest market. And I know that all of our current shareholders are very enthusiastic for us to make that announcement. So I'll pause there and open up to some questions, Tim.
Thanks, Brent. It saves me asking that question. Can you give me some feedback from the buyers? There's a question here. What sort of efficiency gains are they seeing it? What does the staff feel about it?
Yeah, so remember, we're actually not in the business of putting the discipline of microbiologists out of work. What we're doing is automating one part of their workflow. There are other parts of the workflow that are really reliant on the microbiologist. So what we're doing is that we're effectively triaging or removing all of those negative plates out of the workflow. So it's a very boring, mundane task, to be kind of candid around it. And we still need those microbiologists to do the identification and antibiotic susceptibility testing for those plates that are positive. So the microbiologist remains an important role within the lab. And so what we found is that when we put the instrument into the lab, the customers and the microbiologists are not overly resistant to the technology. In fact, they are quite happy that they don't have to look at all of these kind of negative plates and just use their expertise for the positive and the most difficult plates.
And can you give us a little bit more color on the APAS revenue model and how that works?
Yeah, so it's a CapEx model. We do have leasing models available as well. So it retails for $300,000 US, and then there's an annual software license that's associated with that. When we establish our channel partners, like we've done with Beckman in Europe and we will do in the US, they'll take a margin, a distribution margin, and obviously there's COGS that are associated with that as well. Because LBT are pioneers and developers of the software, we get a high percentage of the royalty. There's an annual software license that comes directly to LBT.
And these JV partners, are they like 50-50 partners? Do they share 50% of the revenue?
Yeah, they do, and the costs, I should say, as well. So we've been in a joint venture now for a bit over 7 years, and so they've been part of the development, and they will share part of the revenue as we see that coming through as sales start to materialize.
And there's a question here: if FDA is approved and a US distributor is struck, a distribution deal is struck, how will this affect the potential sales moving forward?
Yeah, well, look, the US market is going through a bit of a wave with the Delta variant, similar to what we're happening in Australia. So we've seen a bit of a contraction in terms of getting access in front of our customers, and we see that as a near-term challenge, probably over the next kind of 12 months. I think what I would say is that the particular partner that we will announce has a really sizable sales organization. They're well established, and it's a household name in a similar way that perhaps Beckman Coulter are a household name. So basically, the reach will be far beyond what we would be able to do otherwise ourselves. And even with the challenges of COVID, we're optimistic that we will have a better chance of getting in front of customers with this distributor appointed.
Great, Brent. That's all we have time for. Appreciate your time. Have a nice weekend, and we'll get you back on in the near future.
Thank you, Tim.
Thank you. Next up, we have MicroX, ASX code MX1. Market cap of around $129 million, 1 year return of up 55%. The company is an award-winning ASX-listed X-ray technology company. We welcome back their Managing Director, Peter Rowland. Peter, over to you.
Good afternoon. Thanks very much indeed, Tim. If you'd like to forward to the next slide, I'm sure you've all read that. Thank you. So that's the précis of our technology. We've created the first X-ray tube in the world that doesn't need a hot filament to generate the electron current in it. Why is that important? Because that allows you to electronically control it, but it makes a big difference to the size, as you can see in this slide. And that's the core of it. All the products that we're going to build based on this new technology use the electronic controllability and just this huge reduction in size as the core. If you look at the next slide, we talk about our corporate strategy. There's some giant companies all over the world who have been trying to get an electronically controlled X-ray tube for probably 15 or 20 years, and we managed to get there first. So our strategy is focused around how do we monetize that first mover advantage, very conscious of the fact that often with a new technology that changes a whole market, the innovator does all the hard work, and whoever comes second earns all the money. So our strategy is very much about early commercial domination. So just moving quickly to get the low-hanging fruit, the products that really offer a huge amount of value to customers and offer the chance for us to make some seriously good gross margins, because we're adding customer value with products that frankly have no competitor, because the product functionality can't be done with conventional technology. Our plan is to commercialize high in the value chain, so we're not selling X-ray tubes or parts. We want to be as close to the customer as we can, as far up the value chain, because that just leverages the competitive advantage of what we've got. And obviously, we're a small company in Adelaide. To get to market, we need a number of channel partners and collaborations. So our goal in all of this strategy is 4 production lines making products for global markets. I'll run you through what those 4 product lines are. Each one of them is a giant market opportunity in its own. If we look at the next slide, our first go to market was in hospital X-ray, mobile X-ray. Obviously, we've got with a small X-ray tube, we can make a very small cart to carry it. So we replicate the performance of machines that are 500, 600 kilograms. Ours is 95 kilograms. That allows it to be smaller, to get into tighter spaces. It's faster to work. We've discovered in COVID times, it's faster to sterilize disinfect after each procedure. We launched this originally with Carestream, who were our exclusive distribution partner for the first 2 years. We've got about 250 units operating in actually 30 countries around the world. But now we're selling under our own brand and looking to build up our own international sales and not direct selling, but through independent distributors. The products in 3 variants at the moment, each of them exploring different areas of the same product functionality. Obviously, the core market is medical hospitals for bedside imaging and ICUs and EDs. There's a separate market in deployed military hospitals. That's an interesting market because in a tented hospital, think of MASH 4077, you can't use a 600 kilogram X-ray. So we've kind of got that market to ourselves, and obviously that's financially attractive. And we've also discovered that there's an emerging market in veterinary applications as the veterinary market transfers to digital and workflows in veterinary practices, particularly in multi-doctor practices, become busier and busier. So that's, as you can see, we're all over the world, and that's just starting to get some serious traction for the coming years. The next slide is a second product. This is in full-scale engineering development right now. The idea came actually from a contract we got from, in fact, the Department of Defense in Australia sought us out, gave us a contract to explore whether this was possible. If you look at the top right-hand corner of the slide, that's how bomb disposal is done. You got a suspicious package. You want to know whether it's a bomb. So the little thing in the guy's hand is a miniature X-ray source, and there's a black detector plate behind it. The problem is, if it is a bomb and it's booby-trapped or it's radio operated, that's a pretty hazardous thing. So the Australian Department of Defense asked if our technology could turn that into something that was more like Superman vision, where basically you didn't need the separate detector. You could just shine the X-ray onto the package or a backpack and see what's inside. We developed that technology. Nobody else can do it because of our X-ray source. We're getting amazing high-resolution images, and the world's getting quite excited, the world of bomb disposal, because with our technology, you'll never need to go near a bomb again. You can see bottom right, our little package there that's the camera. It gets picked up by a robot. The robot can just drive it in, point it at the device, and 500 meters away, you can see a high resolution image of what's inside. So it's a life-saving invention. That's a lovely marketing equation, of course, because you can price that pretty much how you want, because there's no bomb squad commander is going to decide that it's too expensive, and he's going to ask his guys to go in and do it the old-fashioned way. So we're pretty excited about that. We'll be doing customer demos at the turn of the new year, and we'll be in sales by May, June of this year. So that's a big focus for us during this financial year. Next slide is the product I just described uses what's called backscatter, which is as different from transmission X-ray. It turns out the backscatter is very, very good at being able to see explosive material. It kind of self-highlights in the X-ray image. And because of that, we won a contract from the British government a couple of years ago, the Department for Transport, which was aimed at looking to find small amounts of explosives hidden in electronic items. You might remember there was a time where they were threatening that you couldn't take your laptop on an airplane because they were worried that they couldn't spot small explosive elements inside hidden in a laptop. that contract showed that our technology can do that. We won a further contract to show how we could do that in 3 dimensions. And then, of course, the British government has been talking to the American government. So about this time last year, the American government went out with a tender for their vision for the future of airport checkpoints, which is all self-service. Now, you're probably aware that, anyway, those of us that can still remember flying in an airplane, that everything in the airports is becoming more and more self-service, whether it's your whole baggage check-in or getting your boarding card or access to the airbridge gate. The one thing they haven't been able to automate, to self-serve, is the checkpoint because of the X-ray and the body scanning. The X-ray was the bit that held everyone up. Now that we've solved that with this miniature unit we developed under the British contract, we won this contract from the Department of Homeland Security. We'll be signing it in the next couple of weeks and starting work to deliver a prototype of that. But that's potentially the future of airport checkpoint. Also won a contract to get to design the overall portal to integrate that with the document photometric ID and body scanning. So that's a nice thing as well, because that puts us again high up in the value chain to really drive the implementation of this new self-service portal across all global airports. Next slide. Also recently awarded from the Australian government this time, a contract from the Medical Research Future Fund to basically change the way stroke management is done. In short, basically, if you have a stroke, it could be a clot or it could be a bleed. The clock is ticking because you're losing so many millions of brain cells per minute until you start treating that, and you treat it with either a clot busting or a coagulating drug. But obviously, if you have the wrong diagnosis, you kill the patient. So they won't start treating a stroke patient until they've got a diagnosis, and the standard of care for diagnosis is a CT image. Our technology allows us to produce a CT image in a tiny unit with no moving parts, and that allows us a price point and a reliability that we could fit that to every ambulance around the world. So huge game changer in stroke management. And if we carry on, I'll flash through that. The rollout of these products next year for the camera, 2 years for the checkpoint, and 2 years after that for the brain scanner. And I'll close off there and open it up for questions.
Thanks, Peter. Quite a few questions. Where's all this manufactured? And I mean, is it manufactured in Australia or is it manufactured offshore?
Yep, all manufactured in Adelaide.
In Adelaide. And as you scale, will you have to kind of broaden that where it is manufactured? Look,
we want to try and keep it here because we design products in a clever way that for instance, our mobile X-ray, we can assemble that in 257 man-minutes. So there isn't a big penalty for paying Australian labour rates if that's all. And the security of having, I mean, we've got game-changing technology. We do not want to let that out of our control. So you start subcontracting that out, and there's a danger that you lose control of it. The answer is we're very happy we can keep scaling and keep control of the technology in-house.
I mean that makes a sense, of course. And what about patents for this technology? I'm sure that's a question you get frequently.
Yes, we've got about 13 patents for a range of things, but including, most importantly, the core technology of the X-ray emitter.
Sorry, go on.
No.
And you talk about kind of first mover advantage with your product. Can you have that first mover advantage across all these products?
Yeah. Every one of these products, exception of the mobile X-ray, because there's a lot of mobile X-rays. That was our first product, and it's not a good strategy for your first product to be disruptive, because the time to first revenue can be very long with a truly disruptive product. It's highly differentiated, which is good. But the other products that we're talking about in bomb disposal, in stroke imaging, and airport security, nobody else can do. So we're in the market on our own, and our aim is to commercialize those as quickly as we can. Just because when we're earning money from that just puts us so far ahead of the competition.
I mean, there's certainly very impressive products, and so what's the pipeline for revenue and profitability? How's that look? By the end of or during next financial year, we'll be on break even. And so that's when the sales and profitability will cover our costs, which is it's a challenge, because we're doing 3 product developments simultaneously. We're not doing these in sequence, and then the sales start to build very, very quickly. By 5 years, we're generating some pretty enormous amounts of cash. And given the breadth of products, I mean, we are looking at different things, obviously. Do you focus your energy, for want of a better word, on where the most profitability and revenue is per product? Or how do you kind of focus on the different products, given they are across, such a wide field?
Look, we looked at a lot of different products before we settled on these 4. These 4 really are outstanding, not in terms of the size of market, and the fact that we've had external funding. People have paid us to develop these products, which is always a good indication that the market's anxious to get it.
Yeah.
Those are the 4 products. We're recruiting now to develop those. The first product's already in market. Where the building there is in the sales pipeline. But in the other 3 products, we're developing those. They've got different launch dates. But we've got a team on each one of those working that very hard to really maximize the competitive advantage we've got.
And in terms of competitors, there's quite a few questions here around EM Vision and their stroke product. Can you give us some color on who your competitors are?
Yeah, look, EM Vision's not really a competitor. They've got a very new technology which kind of images. It's more like an anomaly imager in the brain. So it can see an anomaly like a stroke. As of yet, that's not, the medical world hasn't worked out that that's a way to diagnose a stroke. Because if you're in an ambulance deciding whether or not to administer TPA, you make the wrong decision, you kill the patient. So the standard of diagnosis today is you've got to make sure that if that there isn't a bleed. It's all about what size of bleed you can image. We've already imaged in our prototype that we've got so far. We've got very close to the standard you can get with a conventional CT, and our friends at Johns Hopkins in the US are looking at doing the analysis on our image processing. They reckon we'll do better than the conventional CT. So that's the whole thing. You've got to be able to say that if there's a small bleed in the brain, you can't miss it.
Understood, Peter. Thank you. That's all we have time for. There's quite a few questions here. If you have time, you could type the answers. If not, I'll send them to you during the week. But have a nice weekend, and we'll see you again.
Thank you. Yeah, if you send any questions through, I probably can't answer them all today, but I'll get to them over the next couple of days.
Appreciate it, Peter. Thank you.
Very much. Cheers.
Next up, we have FirstWave Cloud Technology, ASX code FCT, market cap of 50 million. Stocks had a 1-year return of minus 45%. The company is an Australian headquartered global cybersecurity company. We have with us John Grant, who is the executive chairman. John, over to you. Thank you.
Thanks, Tim, and good afternoon to all. Moving to slide 2. FirstWave Cloud Technology is a cybersecurity company. Its mission is to democratise enterprise-grade cybersecurity as a service for small to medium businesses globally. I'll elaborate further on the 4 elements of the statement as we go through the presentation, but the bottom line is that our intellectual property, which had its genesis in the Telstra Research Laboratory many years ago, makes expensive cybersecurity products from the world's leading vendors and normally only available to large enterprises inexpensive and hence available to SMBs globally from the cloud under a subscription. Moving to slide 3, I'd suggest there are 5 key takeaways for your listeners today. Number 1, the global market opportunity for our offerings is huge. A $29 billion target market netting to a $4 billion obtainable market, that is, revenue we can access through our current channels. Number 2, our intellectual property is unique and uniquely services this market. Number 3, in the last 12 months, we've developed a large channel of partners, primarily telcos, through which in June last financial year, we generated $9 million of annualised recurring revenue, $3 million of which was from international partners, a 7-fold increase over the year. Number 4, the company has experienced people at the helm. And number 5, and fortuitously perhaps for new shareholders, based on our international experience over the last 12 months, we believe we are at a key inflection point beyond which we expect to see a boost in uptake and accelerating revenue growth. I'll explore each of these further as we go through. Moving to slide 4, and I'm not telling you anything you don't know in this slide. The global cybersecurity market is, as the headline says, a tsunami. The headlines are mostly about larger and publicly known organisations, but the unstated reality right now, here today, is that 43% of cyber attacks, increasing daily, are on SMBs, those that are the most vulnerable through their lack of expertise and their limited capacity to pay. In slide 5, let's take a deeper look at the global problem that creates the huge market opportunity. It's twofold. Firstly, with the service provider, and secondly, with the end user, the SMB. Last financial year, an estimated $150 billion was spent by organisations globally on fighting cybercrime. My view is that this is significantly understated. Very unfortunately for buyers trying to mitigate cyber threats, the cybersecurity solutions market is immature, highly complex, and almost completely fragmented. The service providers, primarily telcos and ISPs, service the SMB market globally with communication services which are now totally commoditised, and consequently, they are under enormous competitive pressure from retail and cloud providers, and margins are declining. They need new revenues. This combination, of course, makes them the natural provider of revenue-adding cybersecurity services, but they move slowly. When the end user SMB tries to remove threats at the email, web, endpoint, and firewall, their organisation's perimeter to the outside world, they will be faced with buying up to 4 products from 4 different suppliers and implementing, monitoring, and managing them separately. This is unrealistic to expect, and hence SMBs don't do it and are poorly and only partially at best protected. Slide 6, FirstWave accesses the $4 billion global SMB opportunity primarily but not exclusively through the natural provider to this market, the telco and the ISP. On slide 7, let's now look at more detail at FirstWave's solution to these problems, how we get to the market and the success we've had to date. FirstWave's intellectual property is its Cloud Content Security Platform, or CCSP for short, shown in the centre of this slide. I said at the outset that it's unique, and let me explore the 4 elements of our business model to explain this. Slide 8, firstly, we do not compete with the best and the biggest global providers of cybersecurity products. On the next slide, sorry, you moved too quickly. You're moving too quickly. Can you go up, please? Back, back, back. When I say next slide, we'll move on. Thank you. We don't compete with the best and the biggest global providers of cybersecurity products. Rather, we license the best-in-class technology from the likes of Cisco, Simplified Systems, Trend Micro, Fortinet, and Palo Alto Networks, and through CCSP, virtualize them, that is, make them available as software from the cloud, and multi-tenant them, that is, we slice them up so multiple users can access the one license and hence for a fraction of the price. This is unique. In addition to prevention capability of these technologies, we add advanced detection and response functionality in CCSP. Again, so far as providing this level of detail of protection for SMBs is concerned, this is unique. Moving down. And through CCSP, we provide what's called a single pane of glass. That is, an interface for the service provider to operate and manage all of these different technologies as one. This is unique and significantly lowers their cost to serve, thus driving up their margins. Moving down again, these services for email, web, endpoint and firewall threat prevention and advanced threat detection and response are provided as new revenue generating cloud delivered services for the full range of services providers. And moving down, finally, this provides SMBs globally with simple and affordable enterprise-grade threat protection at their perimeter to the outside world. This is unique. Moving on to the next slide, and we are working right now to provide one-click world-class protection of the SMB end user in a very familiar format on their mobile devices. The next slide. FirstWave's come a long way since listing in 2016. It is required, and the company has benefited from the ongoing patience and support from its founding and current shareholders. Starting in 2016 with one partner and security services for email and web only, early stage web. Today we have 134 partners, of which over 50 are billing customers, 6 security services across the full perimeter of email, web, endpoint and firewall, and advanced threat detection and response over email. On the next slide, these services you'll see are delivered through a set of cloud platforms and by our people in locations throughout the world. This is a huge achievement for a little company based in Sydney in Australia, but it also has to be said that it has taken more time and come with more investment than anticipated. In the next slide, but over this time and through this investment, we now have services available and the channel established to get to the $4 billion opportunity. The leverage that exists through this multi-level channel of one level 1 partner to many level 2 partners to many more SMB end user customers is self-evident on this slide. On the next slide, you'll see revenue growth is following, with annualised revenues at the end of the last financial year totalling 9.3 million, composed of 6.3 million domestically, primarily through our partner Telstra, and $3 million, up 7-fold from the end of the previous year, from our international partners. Slide 17 shows that the company is led by an experienced and battle-hardened team at the executive level, me as executive chair and acting CEO, Ian Bartram as CFO, and Simon Ryan, who's been with the technology since its inception in the Telstra Research Lab, as CTO. And on the next slide, at the board level, Paul McRae, a software veteran who brought Message Labs, an international provider of integrated mail and web security services, into Australia, and David Huang, an experienced corporate lawyer specialising in capital markets and corporate governance. The company is very fortunate to also have the services of Kevin Block, ex-Cisco CTO for the ANZ. It's acting as its advisor on technology and markets. Slide 19, or the next slide, I suggested at the start that FirstWave is at a key and exciting inflection point beyond which we expect to see a boost in uptake and accelerating revenue growth. Over the last 12 months, the enthusiasm we've had from our partners for our technology has, in our view, and even given the 7-fold increase in international annualised revenues, not be matched by the uptake we saw as possible. 6 months ago, we brought a new DNS web threat prevention service from Simplified Systems UK into our portfolio. It has a different adoption model, requiring users to opt out rather than opt in, and adoption is now already starting to scale. This has been instructive to us for our core CCSP offerings in that it has identified friction for both end users and service providers that we now see as a core reason for a slower uptake than thought possible. Our development team is now working on enhancements to CCSP to remove this friction and make it simpler to adopt and use. We anticipate this work will be completed and delivered by the end of Q3, and that uptake can be boosted and revenue accelerate from that point. So moving to the summary on the final slide, with a $29 billion target market netting to a $4 billion obtainable market, the opportunity is huge. Our intellectual property, CCSP, and its ability to democratise enterprise-grade cybersecurity services is unique. We have already established a large and highly leveraged partner network, one to many more, with the capacity to generate significant rates of revenue growth. The company is led by experienced and battle-hard executives and board members, and as I said at the outset, fortuitously perhaps for new shareholders, we believe a key and exciting inflection point is approaching. Thanks for taking the time. I'll turn you back over to Tim for questions. Thanks, Tim.
Thanks, John. You obviously were involved in the Australian Rugby League. What attracted you to this business?
Yeah, very good question. Yeah, I was involved in rugby league. That's another story. Well, I've been in the technology sector for a long time, for 40 odd years. So I knew very well the sort of technologies that were the leading technologies around the world from the big providers such as Cisco, etc. What I also knew about them was that they're expensive and they really only tailored to the enterprise and government customers. So there's been a whole section of the user marketplace which has been really totally ignored, and when it has been addressed, it's only been addressed in point solutions. You know, security service for an email, security service for web, etc. And that sort of part solution type approach just doesn't work at an SMB level. And I've been in and been part of and owned shares in SMBs, and I know how difficult it is. So with those two things, I just looked at the company and I thought, enterprise-grade security services, which are therefore the best in the world, through a process which is inherent in the intellectual property of FirstWave, taken into the cloud, and then made available at a price point that suits the SMB customer globally, has to work. And, you know, it takes more time and more money than anyone ever thinks for these things, right? But the premise has to work, because at the moment, all of the market is underserviced and it is getting more and more dangerous every day. And the second element, of course, is how you get to the market, because there's plenty of good products sit on shelves because they just can't get them sold. And the only way that we can do it is through the channel. And so I understood the channel as well. And, you know, this is the telco particularly is a difficult channel, but the thing about the telco channel is once you get into it, it is very, very hard to get out of it. And that's what we found with Telstra over the sort of 15 years that this company's been dealing with Telstra. So I saw then sustainable longevity as well, and I thought I could help. Frankly, I thought I could help, so I was keen to get involved.
And John, when does the company expect to be kind of cash flow break even?
Yes, and you know we've looked obviously at the situation. We look at it all the time because at the end of the day, it is all about cash. When we released our upgraded product in Q3 next year, and we get the take up that we believe we can get, then we'll be pointing towards break even in the next 1 to 1.5 financial years after that. So, you know, we're going to need more capital, but right at the moment we're focused on doing the job that we can do. We've still got some significant growth that will come from the products that we're taking to market before we actually roll out the new technology. So, you know, we've got a few irons in the fire, but all of those are aimed at making sure that we do the best job that we can. And our objective clearly is to get to cash flow break even as soon as possible.
And John, just quickly, I was talking to one of your institutional shareholders. He said the Australian market's been sideways for the moment. Is there any opportunity in Australia for FirstWave?
There's opportunity everywhere, Tim, because of the problems everywhere, and there's no solutions to it. Getting to it is really a function of what the environment is, how the environment is affected. Number one, by who's selling to it. Number two, by what are they actually experiencing and where do they want to make their investments. And number three, by just the scale. So Australia's small in the scheme of things. Telstra's a large organisation, but in the global terms, Telstra's not a huge telco, you know. So when we play on the global scale, you're playing much higher stakes than you play in Australia. So we've got a very developed domestic focus. We've got a very strong change in focus from Telstra that we're seeing, led by Andy Penn from the top down, from a cybersecurity point of view. So Telstra is becoming a much more active organisation in that, and they will set the path, and others will follow.
Great, thanks, John. That's all we have time for. There's some follow-up questions. I'll shoot them through to you over the weekend.
Thanks, Tim, and thanks everyone for listening.
Thanks, John. Next up, we have OpenLearning, ASX code OLL, market cap around $25 million. The stock's fallen 60% this year. The company is revolutionising online learning to be a social and engaging experience. We have with us, and we welcome back the CEO, Adam Brimo. Thanks for your time, Adam. Over to you, mate.
Thanks, Tim. Great to be here. Thank you very much. Good afternoon, everyone. We'll start with the next slide. Thanks. So I'm Adam. I'm the founder and CEO of OpenLearning, and OpenLearning is targeting the $7.5 billion online lifelong learning market. Now, what this market is comprised of is everything from what's considered non-formal education, So that's, short courses, professional development, all sorts of online programs that you might take, 1 or 2 hours long, a few hours long, all the way through to certificates, diplomas, even postgraduate degrees. Now, all of this is online, and OpenLearning initially started focusing on the non-formal part of this sector. Now, over the past year, we're expanding upwards, and we're now running more programs that are either for credit or pathways into accredited programs. And that's expanding our accessible market. And this is just Australia. OpenLearning actually operates in Southeast Asia as well, where the size of the market is significant, but obviously data is less easier to come by. Next slide, please. Now, OpenLearning is one of the leading lifelong learning platforms in Australia and Southeast Asia. Now, what does that mean? So for us, lifelong learning is comprised of really a few different key components in the platform. And OpenLearning is a complete solution that enables education providers to move online and build their lifelong learning business. This includes everything from the consumer end, so being able to actually collect payments for your course through OpenLearning, launch your marketing pages, promote your course to the public. That happens on OpenLearning. After that, people go into the course itself, and inside there, we actually have a learning experience which significantly increases the level of student engagement, project-based learning, community of practice. All of that occurs within the OpenLearning platform. So OpenLearning itself is actually built on proven learning sciences research, and that happens inside the course. Now, with that, we have all the tools for the teachers to actually build their courses in the platform, manage the course, handle delivery. That's all done there. At the end of the course, you can actually issue digital credentials, so micro-credentials, badges, certificates. And at the end of all of that, every student actually has a portfolio, which captures everything they learned in the course, and they can then actually share that with potential employers or even back to a university for getting credit. So the OpenLearning platform really is the complete solution. And this is actually replacing a lot of disparate systems that an education provider would have to use if they wanted to enter this market on their own. So a lot of institutions offer online courses, and they typically do that through, say, a learning management system, which is a very traditional type of system. People upload their content, download videos, quizzes, engagement's very low. It's not designed for the consumer market. So OpenLearning is really designed for that lifelong learner. And what that means is we can actually put all these pieces together within the platform. So an institution moving online doesn't need to purchase multiple systems. They don't need to get a website set up. They don't need to get a payment gateway. They don't need to get a learning management system. They don't need a student management system. So that all cuts down the cost of delivery and enables these providers to offer courses that are more affordable and get those to market a lot faster. Now, OpenLearning is a proprietary platform. We're differentiated by technology, learning philosophy, a brand that all of our users and customers can see, and geography as well. We're focused on Australia and Southeast Asia, and particularly in Southeast Asia, Malaysia, and now Indonesia as well. And because of our global platform and brand, there are inherent network effects in what we've built. And what we've seen in the programs running on OpenLearning is that they're consistently getting learner engagement and student satisfaction scores of 20 points higher than those courses previously achieved. Now, over the years, we've had over 2.9 million learners take courses on OpenLearning. We currently work with 184 education providers. This is everything from small independent training providers all the way through to some of the largest universities in Australia. And on top of that, there's millions of interactions occurring on the platform on a regular basis. Next slide. Now, to service this market, we actually offer a suite of products. And what that includes is our platform, which we offer on a subscription model. This is a software as a service model, and it's based on people's usage of the platform. So a university signing up to use OpenLearning might start off paying, say, $50,000 a year for up to 5,000 people. A small education provider can actually go onto our website. They can sign up for a few $100s a month for a few hundred students, and they can actually go and start building their courses and using all the functionality on the platform. The second service we offer for this market is program delivery. And in there, we partner with top institutions to deliver programs on the OpenLearning platform with the full spectrum of delivery capabilities. So everything from assisting in promoting the course through to handling the course delivery, assessment, facilitation, support, student success, and all of that. And in addition to that, we have value-added services that education providers, our customers, are able to use if they want to. This includes selling their course through our marketplace, so using our payment gateway. and also our learning design services to actually help them move online and design really high quality courses that leverage the functionality of the OpenLearning platform. Next. Now, what we've seen over the past couple years is accelerating growth in platform revenue. Now, you can see that over the past, this is on a half-yearly basis. So we operate on a December year end. So this is up until 30 June. The first half for us is 30 June. And we were able to grow our platform revenue, which is our core platform subscription and program delivery business. We've been able to grow that by 120% year on year. And a large portion of that growth actually happened in the second quarter of the year. So, that combined with the existing growth in the business has really shown that revenue growth is actually starting to accelerate now quite quickly. Now, in those two components, we saw underlying growth in the subscription, the SaaS model of over 40%. And we saw revenue coming online from our new program delivery segment from the transition program online, which just started in March this year. Next slide. Now, on the platform subscription side, we've seen over the past year a 59% increase in the number of SaaS customers. So this is those customers that are paying us on a software as a service basis. And that grew from 116 to 184. We've seen our annualized recurring revenue grow by 27% year on year. And we've seen a number of new clients join the platform in the past half year. This includes some very large clients such as Afterpay and the University of Wollongong, which recently signed a 5-year contract with us to use the platform specifically for lifelong learning. We've also signed up the Australian Technology Network, which is a network of 5 universities across Australia, which focuses on technology themselves. Now, we've also introduced a self-service sign-up and onboarding process, payment and admin tools. Now, what this means is that small education providers can go onto our website, sign up with their credit card, and do everything themselves, and are supported remotely by our customer success team. Now, this is probably how you think most software as a service products would work, and that's true in many sectors. But in the education sector, a lot of these education providers are still a little bit behind. So, a lot of times you have to use personal selling, you spend a lot of time and effort, very long sales cycle. So we're actually trying to move some of those smaller clients into a more automated process. And that will allow us to reduce the sales cycle and hopefully attract more clients as well. And we've seen that come online recently, and we're starting to see the benefits of that. And we're starting to invest significantly in sales and marketing in both our core markets and also our expansion to Indonesia. Next slide. Now, we introduced the program delivery segment of the business just in the past half year. And the first program that we launched in this segment is the UNSW Transition Program Online. Now, what we do in the program delivery segment is we look at programs that actually can appeal to more than one institution. Now, typically when what's considered the online program delivery sector, where there's a number of companies operating in this sector, typically these companies operate on a one-to-one relationship with the education provider. So they will go to the education provider and they will help them run their, let's say, MBA program online. And it's fully white labeled as that university, and it's only available for that university. And if the company wants to scale, they have to go to another university, build the same program, get everything set up again. And you don't benefit from the economies of scale as much as you could, because there's a limit to how many people you can get from each university. What we look at in the program delivery segment are programs that could appeal to more than one university. So the program gets built once, and there may be a sponsor university who's got their name on it or who helps set it up. But then the program is opened up to multiple universities to participate in, and all of the universities who participate get the benefits of that network. So this is quite a new model, but it means that we can actually scale these programs to a much larger number of students than previously possible. And we recently launched a new program in this segment called CS 101, Computer Science 101. Next slide. Now, from the UNSW Transition Program Online, we've seen very strong momentum. Now, just as a refresher, if you haven't heard from us before, the transition program is a pathway program into university designed in collaboration with UNSW. And it was previously a face-to-face program for about 15 years. And for last year, we worked with them to move the program online. It's a 4-month intensive program designed for people who just missed out on getting into the university. So maybe their English mark was a bit too low, or maybe they need a bit of a refresher. So this program has now launched. Students pay about $16,000 to take the program. And while it started with UNSW, the program is now being accepted by 5 more universities around the world, including universities from the UK and New Zealand, which we've just announced. And we believe that there's a very large market for this program. We had 1 intake already, and there's 3 more intakes this half. Next slide. A new program that we've just launched that's under development is Computer Science 101. And this program brings together tech industry experts, leading technology companies, and tertiary education providers to produce a 3-course micro-credential that's designed for upskilling in computer science. So helping people move into programming, software development, technology fields. And there's a huge gap in the market at the moment for this, and there's a skills shortage nationwide that we're looking to address. Next slide. So what we've done over the past half year is we've really invested in the platform, products, and sales to accelerate our revenue growth. Now, obviously, this has come at a cost, and we have had losses over the past half year. But as you can see, we've actually invested in 4 different areas simultaneously, and all of these areas are now starting to generate revenue. So we're quite confident going forward that these investments that we're making are going to generate even more revenue going forward, and our growth will continue to accelerate. But these have required some substantial investment so far, but we're pleased that in particular, the transition program has already been generating a return on that investment. Next slide. So that's really all from me. We've got the key components of the company's growth strategy in place. We've got a range of products out there. We're focused on growing our market share in a large and growing market. We've been able to grow our platform revenue by 120% year on year. And we've got new agreements in place with some very large clients that are helping to support our growth. We've got a good amount of cash on hand, given our growth strategy. And we're seeing continued traction, both in the platform subscription business and also the program delivery side as well. So thank you very much for your time this afternoon. And over to you, Tim.
Great, thanks, Adam. A couple of questions here. What's the kind of expected impact on the business as, as countries open up post-COVID and there's more face-to-face learning?
Yeah, so we're expecting a positive impact, which might sound a bit funny, but the reality is over the past 18 months, our core customers, which are the university sector, have lost between $5 and $10 billion. And means they've actually had to reduce their spending in a lot of areas. They haven't been able to invest in bringing new programs to market, invest in new platform and technology. So we think that as the borders reopen and as international students return, there'll be a benefit to the sector as a whole. And then the investment appetite from these institutions will accelerate as well. On top of that, the UNSW transition program online that we're running, we see that becoming a global pathway into university. And that is a program that will significantly benefit when the borders reopen, because people actually want to study their undergraduate face-to-face, but the pathway program is a means to an end. The aim is to have a program that gets you into university at a reasonable cost and at a high level of quality, and that's what our program does. So we're quite excited about the borders reopening soon.
And can you give us a little bit more color on the expansion of your Open Creds program?
Yeah, definitely. So we launched Open Creds last year, and Open Creds is Australia's first framework for lifelong learning micro-credentialing. And it's designed to work with both universities, higher education providers, vocational industry. Now, we have a couple of programs that we've been running under that, our Open Creds Investment Fund and our partnership with Open Universities Australia. We now are pleased to say that we have almost 40 courses under the Open Creds framework that have now come to market and are being sold through the platform. This includes courses from Deakin University, another university that's now launching courses as well, and about 10 private higher education providers that now have courses in the market. So we're seeing continued traction from Open Creds. We think that it will take some time for the revenue specifically from the Open Creds segment to build, but that has added significant value to the ecosystem itself. And the CS 101 courses are actually Open Creds as well. So we see that gaining traction too.
And just finally, your share price has been under pressure for a little while now. What do you see that, what don't investors get here? I mean, you're in a very large market. We know you've got to fund growth, but you've got a fairly decent cash position here. What are investors missing?
Yeah, I think investors will probably need to take a look at, I guess, the size of the market, but also how we're tackling that market in terms of growing our revenue. And I think early on, maybe it was hard for some investors to see how it would actually drive revenue growth in the market. And I think late last year, maybe some people were thinking that, online education should benefit from COVID. And once COVID goes away, hopefully at some point, online education will die down a little bit. I think the opposite's actually happened. I think there's a lot of excitement around online education last year, but really things take time in the education sector. And last year we put in place a lot of the agreements with partners that will drive revenue growth in the years to come. And that's exactly what we're doing. We signed agreements last year with Unsw for the transition program. That's now in the market. It's generated revenue in excess of our investment. We launched Open Creds, those are in the market now. So we've got a track record of doing this, but I think maybe investors need to take a fresh look at the sector and try and differentiate the companies that have a pure technology play in them versus those that maybe don't, and then see, whether we're actually, fairly valued or not. I'd also probably point people to the research that's come out from Canaccord and MST Access, which have, some really good analysis on the company's growth prospects.
Great, Adam. That's all we have time for. Have a nice weekend. We'll see you again.
Thank you very much. All the best. Take care.
Thanks, everyone. Beautiful weekend here ahead in Sydney. Have a nice weekend to all of you, and we'll see you again next week.